What are stocks? It's time to learn all about stocks, from what they are to all the different types available to what they can mean for your portfolio. Buy and hold investors invest in companies that have stood the test of time. Traders take a more active approach to investing, placing more emphasis on stock price movement than on the real value of the company. Regardless of which strategy you apply to your holdings, the same underlying rule applies. Know what and why you're buying or selling before you make any trade. Buying stock in a company. Getting a piece of the action purchasing shares of stock is like buying a business. That's the way Warren Buffett, one of the world's most successful investors, views it, and his philosophy is certainly worth noting. When you buy stock, you're actually buying a portion of a corporation. If you wouldn't want to own the entire company, you should think twice before you consider buying even a piece of it. If you think of investing in these terms, you'll probably be a lot more cautious when singling out a specific company. It's important to become acquainted with all of the details of the company you're considering. What products and services does the company offer? Which part of the business accounts for the greatest revenue? Which part of the business accounts for the least revenue? Is the company too diversified? Who are its competitors? Is there a demand for the company's offerings? Is the company an industry leader? Are any mergers and acquisitions in the works? Until you understand exactly what the company does and how well it does it, it would be wise to postpone your investment decision. Value the company. Let's say you want to buy a convenience store in your hometown. You've reviewed such factors as inventory, the quality of the company's employees, and customer service programs. In addition to selling staple grocery items, the company also rents videos and operates a gas pump. The grocery side of the business may only account for a small percentage of the overall revenue. It would be in your best interest to value each part of the business separately in order to get a complete and accurate picture of the company's profit potential. Many companies have traditionally been associated with a specific business, yet may have expanded into totally new venues. Disney, for example, has historically been associated with the Disneyland and Disney World theme parks. The reality is that Disney is also involved in a host of other ventures. Among other things, the multifaceted company has interests in television and movie production, including Touchstone Pictures and Miramax Films. Disney's ABC Inc. division includes the ABC television network, as well as numerous television stations and shares in various cable channels like ESPN and SoapNet. It should be increasingly clear that making money through investing requires work. The more research and thought you put into your strategy, the more likely you are to reap rewards. Although there are no guarantees in the world of investing, the odds will be more in your favor if you make educated and well-informed investment decisions. When you make an investment, you are putting your money into a public company, which allows you, as part of the public, to become an owner or to have equity in the company. That's why stocks are often referred to as equities. Types of stocks. Common stocks are equity securities that are sold to the public, and each share constitutes ownership in a corporation. When people talk about trading shares, they're talking about common stocks. Preferred stocks are somewhat different. While they still denote ownership in a corporation, they also have some characteristics more in common with bonds than with common stocks. Corporations come in all sizes. You can invest in a wildly successful mega company or a micro-cap company that is just beginning to show signs of growth potential. Some people prefer to buy the common stock of well-established companies, while other investors would rather invest in smaller, growth-oriented companies. No matter what type of company fits in with your overall strategy, it's important to research every potential stock you buy. Just because a company has been around for decades doesn't mean it's the best investment vehicle for you. Furthermore, companies are always changing, and it's important to make sure that the information you are reviewing is current. Mergers and acquisitions have become commonplace, and it's essential to know if a company you are considering buying is undergoing or is planning to undergo such a transaction. Find out about a company's market capitalization or the market value of all of the company's outstanding shares. To calculate the market capitalization, multiply the current market price of a stock by the number of outstanding shares. The number of outstanding shares refers to the number of shares that have been sold to the public.